dash. Stock ticks and it starts to crash, while it's thinner than a broken glass. Market moves got me feeling wild, swinging harder than a rocket child. Picking up odds like a trader around, praying profits ain't reviled. A puzzle complex, trading daily, keeping us perplexed. Riding waves like future specs. Gotta calm down, no pretext. Market moves got me feeling wild, swinging harder than a rocket child.
Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
What's going on over here? Why isn't this working? What's going on over here? Help. Testing. Okay, hello guys. I got the wrong banner on here. Give me a sound check. Let me know if you guys hear me okay. Let me just make sure I got the banners right here. Let me see if I got this. Okay, this is working. And let me see if I can get this one working. This one is not working. Oh, this one is not working. God damn it. Okay. Okay. Oh, I know why. I know why. Okay. Good morning, guys. Good morning. I am back. Let me get myself organized here. I'm back. Somebody give me a sound check. Let me know if you guys hear me okay. If everything is good. Everybody's seeing the screen. We are starting just a little bit early. Oh, there we go. I'm looking at myself here. Okay. Good. Gold could not hold it. Yes, we're going to have some issues with gold. I got short gold over here on a super trend short and covered it. I have a lot of stuff to discuss with you guys. A lot of interesting thought. I was gone obviously this whole week because last week, remember I was complaining about my tooth. I thought it was just gum problems. No, I had an impacted tooth, that like a fucking dead tooth. There is truly no torture more exquisite than tooth pain. And because there was a holiday on Monday, we couldn't get it diagnosed, and then couldn't get it quite properly diagnosed till Tuesday. So I didn't have surgery till yesterday. So I had both an extraction and an implant all at once yesterday, which sounds just as brutal as you would think it is. But I will tell you, nothing to concentrate your mind like pain. And even though I was literally in constant pain for the last week, I had some really interesting insights into trading, into BK Scalper, into everything. So I'm going to share some of them with you today. We're going to just chill a little bit. We're going to take trades as they come. Right now, there are no, the only trade that occurred as far as signaling goes was the super trend trade short, which I took right before the market, right before I joined you guys. NASDAQ is not a signal right now. There was a green signal here that failed. So there was a strong buy that failed. That's all we have right now. And on the S&P, there was a strong buy that failed as well. So equities, I think, are vulnerable to a sell-off. And in fact, look at this. We're getting a possibly a sell signal in the S&P. And if we get that, I'll take it. I'll take it as a trade. I'm going to talk to you a lot about everything that I think is interesting. First of all, just to let you guys know, those of you who are members of BK, the latest version is 1.752. If you want to become a member, I'm just going to put my. Hold on, wait. Hold on. Wrong. Where are we? Okay, here we go. I'm going to put in the link here to my Pass the Prop Academy, which is the best way to get all my indicators and to get all of Kathy's signals and everything else all under one roof. So go ahead, join, subscribe, and you will get access to everything that I'm showing you right now. My dental procedure. Oh, you see my dental procedure is the kidney stones. I will say this, Zippy. You're absolutely right. I am incredibly blessed that I never had a kidney stone. Let's just say that. Let's hope I never do. So yes, I guess that would be the next one on the lot that I would never want to have. Anyways, pain is over, thank God. But clarity is the residue of my pain. So I want to talk to you a little bit about right now. We have, we're opening up. It's 9:32. Not much going on here. Oh no, we're getting a signal in the S&P. So I have a signal in S&P, which is not completing. So NASDAQ is turning down. S&P markets are just really, completely unclear. 52 seconds in the S&P, so we'll wait to see if that works out. It's really, really choppy as hell, huh? Okay, 42 seconds. Now it's starting to drop. Okay, we're going to prepare ourselves for a possible sell in the S&P here. Oof, big move to the downside. That's a big, big ass candle. I think we'd have to go to the MES and get. This is what I was going to say to you. We're going to have to get larger because this trade is so wide. My stops and targets are much wider than the regular 2 and 1. And the reason this is one of the key things I wanted to kind of tell you. From a technical point of view, so now what I did is I went to the micro side because I wanted to give myself the proper amount of room. In this case, the proper amount of room is above here, which is literally like frigging 6 points of stop, which means I really want to have at least was that 4750? 3 points of target, right? So I want to give myself at least 3 points of target to see if this can, can clip me over here. Let's see if this gets me close here. Where am I? not quite. So we're gonna have to float this trade for a while. I think probably a couple of minutes as the market decides whether they want to. I gotta have to put my glasses on in order to be able to actually see what I'm doing. Okay, so I'm gonna leave this trade on. One of the most important things that I realized when trading scalp signals, BK scalp signals, is you absolutely want to be at proper stop levels, which should be at a swing high. And a swing high is defined as the highest point above the moving averages prior to your signal, right? So this is the signal. The highest point above here is somewhere around here. So we're just sort of parked ourselves at the 51 stop to give ourselves plenty of breathing space to see that this trade actually either completes itself or doesn't complete itself. And the way we're going to manage the risk of this trade is by lowering our size so that our loss effectively would be somewhere around $100. This brings me to a very important point that I realized, that I generally want to manage my losses, my opening loss, meaning that the first trade I'm going to make in any given sequence of trades, long or short, against the signal, should be no more than $100 risk. And the reason why is because I'm just going to run through the basic numbers of how this is working, and you'll begin to understand why it's important to keep the risk, the opening risk, so small. If you're trading the way I do, if you're not, and you just maybe only want to do 1 or 2 trades a day off these signals, then obviously your risk can be much larger. But the way I trade is I basically trade from 4 o'clock in the morning until 4 o'clock in the afternoon. That's a 12-hour trade. Now, not all 12 hours. Obviously, I'm going to be at the screen maybe 4 to 7. Then I'll be at the screen, 9 to 11. Then I'll be at the screen 2 to 4, whatever it is. But if you're trading within that global 12 hours, right, and you're taking just the quality signals, and the quality signals would be only the red signals to the sell side and the green signals to the buy side, right? You are basically assured a signal every half an hour, a quality signal every half an hour, right? And so there's 3 instruments that are on your plate: the S&P, ES, NASDAQ, and gold. Each one of them has a signal every half an hour. There's 12 hours of trading window that you're giving yourself. And within those 12 hours, you're going to get 2 signals an hour times 12 hours, which is 24, times 3, which is like 60, 70 signals a day. Okay? Now, you're not going to take all of them, obviously, but it's pretty reasonable if you're active, if you give yourself that kind of activity. You might do 30 trades a day. You might do 30 trades a day, right? And if you're starting out with greater than $100 risk on any given trade sequence, and just for example, it's completely realistic that you enter a trade in gold, enter a trade in NASDAQ, enter a trade in S&P. In all 3 of them, the market turns, and they're all 3 of them on the wrong side. If you have a $100 opening trade risk, you're only $300 to the downside. If you are, $400 or $500 of risk, then it's more than $1,000 of stop out. And now, if you're in a $50,000 account, you're in a very, very precarious situation because you're like halfway down to your drawdown. If you're in 150,000, like I am, you're like a third of your way to the drawdown, and that's stupid. It's really, really dumb to be like a third of the way down to drawdown just off of a single sequence. Generally, if you have a $100 risk per trade and you're doing a lot of these trades, what you're hoping for is that you never during the time of the day are you more than $500 maximum drawdown. Like your maximum drawdown is $500, and then you can always you can recover from it. Like I'll give you an example. I opened up today And I made a couple of market. I sort of was a little bit late to the rallies, so I bought the tops on a couple of rallies. I made a couple of mistakes, and I was down like $350 in drawdown. And then because I was only down $350 in drawdown, by the 7 o'clock hour, I was already back, and by the 8 o'clock hour, I was up on equity on my position. So the most important thing when you're trading is to be able to, I'm just watching to see if there's any other signals here. No, just the same signal over here. The most important thing, and notice that I'm not talking about profits at all, because profits do not matter at all. Profits are just a byproduct of the setup, right? As a matter of fact, you can make the argument that profits are a byproduct of luck. The only element of skill in trading is controlling the losses, right? If you really want to be honest with you, because so much of trading is random luck. You just want to be at the right place at the right time. In order to be at the right place at the right time, you got to be alive and active at the right time, right? You just got to be there. Woody Allen once said 90% of life is showing up, but in order to be able to show up, you got to have the money, right? So when you reorient yourself towards that, that kind of approach, I think it becomes a lot easier to manage the trade cycle, to take the trades, even if you're sort of fearful, take the setups, even when you're fearful, because you're like, oh my God, I had like 3 losses in a row. I don't know if this setup is going to work. I don't know if this is going to work, blah, blah, blah. And, more importantly, to just have your P&L under control. Oh God, sorry, my nose is itching. You can see that, we're like literally just trying desperately to see if I can make this. Let's see if it's going to fall down to my. Just missed my trade by like a tick, which happens, but I'm going to try and stick to the position. So orienting yourself towards assiduously managing your losses, not even looking at the P&L, just looking at the process, is I think the right approach, the right way of doing things for all of us right now. And especially because I had like this really interesting epiphany when it comes to trading, and to kind of explain why trading is so hard. So, and this is true of any probabilistic activity, but trading really makes this point obvious. So anytime, whether you're sports betting, gambling, trading, selling, opening up a business, doing whatever it is that you want, anything that has a probabilistic outcome attached to it, those activities are based upon probabilistic processes, right? No single trade is accurate. What you're basically saying is that, if I do this enough, I'll be 60% accurate, I'll be 70% accurate, so on and so forth, right? However, we make our decisions. There we go. You see, I got my target done. First trade of the day gets done. So decisions have to be made probabilistically, but results are deterministic, meaning that probabilities collapse into a finite truth. You either win or lose. It doesn't matter. In a 99% winning situation, if you choose the 1% of the time when it's going to lose, you are going to lose, right? You're going to be net out money, right? So, and look at this. Wow, we're really starting to come in a little bit. Yeah, as I thought we would. So if that's the case, if you're, we make our decisions probabilistically, but our results are deterministic, how do we survive? Well, the only way to survive in a probabilistic environment is the law of large numbers. In other words, unless you have 100 trades, if you have 100 trades and your probabilities are true, meaning that your model actually models reality accurately, and you are 60% accurate or 70% accurate. The closer you get to 100 samples, the more likely you're going to match deterministically the results, right? So the only way you can match your results is never one trade at a time, but 100 trades at a time, 200 trades at a time, which is why, the whole idea of like why we do so many trades, blah, 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 so on and so forth. And that's why you need to do small amount of trades and so forth. But, it gets even more annoying at a certain point, which is, I think the Walmart really starting to get hit on this thing. I think, by the way, guys, we are ripe. Oh, I'm actually sorry. I'm not even looking, but I see Nasdaq has also just sent a sell signal here. Look at Nasdaq. So Nasdaq is a sell. We're going to go short Nasdaq here. No, we're going to go short the small one, because again, this is a very, very big risk. So I don't want to. So here we go. I'm short this. Wow, it's a really huge risk. God damn. I can't even take this. This is a massive risk. Even this small position is going to put me into if this retraces on me, this is going to be a big risk. So I'm going to just see if we can try to. This is too big a trade, so we're going to have to go. I'm literally going to have to go 1 unit, just showing you what I mean about risk, right? I'm literally going to go 1 micro position. Because what I want is, this is really, it's crazy. This risk is like all the way 200 to, what's my entry, 65. So that is 35 points. And I need to make about 15 points. So 65 to probably around like 52, 53. So what I did here is I reduced my size so much that I can afford now to stay in this position. There we go, and we're done. Nice. So could I have made it on the larger position? Yes, I could have. But that's not the point. Isn't that I could have made a lot of money on this trade? The point is that I could have lost a lot of money on this trade. I don't give a shit about making money, because making money, as I said, is a function of luck, right? The only skill in the game is to not lose money, right? And that's a really, really critical function that you need to focus on. So the only way I'm kind of managing all of that is up and down my size scale, right? This was a very very large stop, like a 40-point stop. So I went from my opening gambit is about 4 micros in Nasdaq, which is about $80 worth of risk. Because I assume that most of my stops will be within the 20-point maximum range. But in this case, the stop was around the 45-point maximum range. So I had to really, really lower my sizing to accommodate for the proper stop. And the reason why you want to accommodate for the proper stop is because it's very natural in a high volatility environment to have big retraces and then reform, and then second waves and third waves and so on and so forth. And there's nothing worse. By the way, people think that what's really, really bad is not using stops. That's absolutely true. But what's the second worst thing to do in trading? Is to have too tight a stop. Too tight a stop is almost as bad as having no stop. Because too tight a stop means that you will die a death of 1,000 cuts. Trades that should be winners will all turn into losers because you're not giving them enough room to mature. Just like you saw in that S&P trade, it took a couple of minutes for that trade to mature, right? So those are really, really interesting, I think, important points for everybody to appreciate as we as we start the trading day, which is we make our decisions probabilistically, but we get paid deterministically. The only way we can try to match those two is to take as many trades as possible, because the law of large numbers will help us get closer to deterministic results. Even with that, we're not going to be able to succeed all the time. Why? Because one, you could have what's called a bad sample. So let's say there's 100 samples And 99 of them should be 60 wins, 40 losses. But 10 of them could be 20 wins, 80 losses, right? In other words, just because you're doing, a big sample doesn't mean that that particular sample is going to match up. It could also mean that the model that you have of the market is completely changed from the model that the market is at right now. And you don't know any of those things. So how do you make sure, how do you avoid that particular fate, which is really the hardest question of all? So, a probabilistic decision-making to deterministic outcomes, the solution to that is large numbers. But how do you avoid probabilistic outcome, deterministic outcome being still negative, even if you follow all the rules? And the answer to that, my friends, is prop trading. Because what prop trading is a deterministic loss on whatever it is. You could buy 10 Apex accounts, and first of all, the probability that all 10 Apex accounts get blown up, in other words, that you hit 100 trades negative in all 10 Apex accounts, very, very slim. But suppose you did. What's your loss? Your loss is like, what, $400? What's your loss if that was real money? $40,000, $50,000. It's a predefined loss. It's deterministic loss. That's why I love prop trading. That's why I'm going to put the link into into my thing here, so you guys can get. Oh, sorry, it's the wrong link. I want to put the Apex link. Yeah, I'm a little bit off my game here as far as all the logistical stuff, but I'm really on my game as far as trading, which is really most important. But anyways, that's how you combat the black swan scenario. Like, what happens if I do everything right and I still lose all your money? You trade prop because you're deterministically capped on the bottom, right? What do you guys think? You like do you like my pain riddled philosophy? Let me put a poll. Am I right? That's my only question of the day. Yes or no? And if you vote no, I want to hear why. I want to hear your answers to me. All right, let me see what's going on here. So we took the shorts in S&P. We took the shorts in NASDAQ. I got nothing on gold right now. So if you want to riff a little bit about let's riff a little bit about tactics. So the next order of business is tactics, because this is the other thing that I really, really clarified that I think is going to just make your life awesome. So, okay, philosophy is all fine and good. All my ideas are wonderful. But how do we actually put this to practice? How do we actually make money? Well, with BK Scalper, obviously we have signals that show us possible entries, in our position. And by the way, notice that all I'm talking about is my maximum loss. I'm not going to give you profit targets. I can give you suggested profit targets, but my profit targets are going to be different from yours because I have a different type of a risk profile, right? So in other words, let's say if I risk 100, maybe I'm only going to go for 50 because I'm going to be willing to come back on the next trade when it sets up and go twice the size, and even the third trade and maybe even go 4 times the size. You may be a completely different situation. You may want to say, I'm going to trade $100 risk, $200 target, and I don't care if I make 4 winners in a day and the rest of them are losers. I'm still going to be net positive. Look at this sell-off. We are getting burnt big time today. So I frankly have been waiting this for a long time. Whether this is the start of the big one, I don't know, but it definitely feels this way, right? And I'm going to give you lots of macro commentary here, and then we're going to get into tactics, when they come up. But I just want to give you my sort of macro read as to why I think the market is coming down. I think the chaos agent that we have in the White House, for whom I voted, so I have every right. Don't at me because I actually was more on his side than on the other side. But I think, as usual, always whoever is in power fucks up big time because they think that they're God. And I think my biggest concern about him was that he thought he was going to be God, and he's about to be bitch slapped so hard by reality that I don't know if he's going to be able to recover, because he had great ideas, but he is, as usual, pushing them all to the limit right now. Yes, the government needed reform, blah, blah, blah. Firing everybody on the spot with $100,000 salary is the stupidest possible fucking thing you can do in the immediate term for the economy. We are this close to possibly being tipped into a recession from a perfectly healthy, growing economy, because he's doing two things. He's constricting the supply chain by putting tariffs on everybody and therefore increasing the cost of goods. And he's destroying demand by firing people. And by the way, getting rid of illegal workers need to be deported, blah, 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 so on and so forth. But they happen to be 20% of the U.S. economy. Okay. Who do you think is going to do economic activity while you try to round them all off? There's all over the place stories of Denny's and Walmarts and everybody else absolutely absent. Nobody there. There's no demand, right? So we are this close from being tipped into a fucking recession because everything is happening too fast. And I think the market is going to, this is another reason why gold is guaranteed to just blow up, because people are going to start to really, really fear everything. The last thing that I think is happening on the chaos side, which is the sort of unintended consequences on the macro side, is if he pushes Ukraine into essentially a Nazi-driven Ribbentrop, Hitler, Russia, Poland, let's carve up Poland in half situation, right? What's going to happen is every country in the world is going to become North Korea. And what I mean by that is we've had 70 years of global peace because we assured everybody that they're under our nuclear umbrella, that we're going to be behind them if they get attacked. Now, the Baltics, what do you think the Baltics are going to do? The first thing they're going to do? What do you think Poland is going to do? They're going to start hunting for nuclear weapons. The only small countries in this world that are safe are Israel, Pakistan, India, and North Korea. Why? Because they all have nuclear weapons. So if the lesson out of all of this is that we're not going to protect Ukraine, and Poland is going to be next, the unintended consequences of the macro are going to be horrible, which is why gold goes to maybe 10,000 by the end of this shit. So yes, this could have some very, very serious blowback. Maybe I'm wrong. I hope I'm wrong. Maybe this is all just, opening gambits and everybody is, calm. But this has all the markings of 1938, of Sudetenland, of all the problems. And the unintended consequences of this are going to be very, very bad. Yes, France has nuclear, and France have nuclear too. France has. I meant small countries. So France, England has nuclear weapons. And by the way, one of the things, everybody's screaming about the Europeans, go give them an army, go give them this. They don't need to give them an army. All they have to do is France. The way to stop this nonsense that's going on right now of carving up Ukraine is Macron simply has to say, we've given 20 nuclear bombs to Ukraine. That's all he needs to say. And I guarantee you, suddenly negotiations are going to be much, much more accommodative than you've ever seen before. Okay? Because if Ukraine says we got 2 nukes focused on Moscow and 2 nukes focused on Crimea, suddenly it's all going to be the same. But my point is, it's incredibly stupid because every single small country in the world is going to want to have nuclear weapons now because they can't rely on us as a nuclear umbrella. That's the negative part of what's going on over here. Okay, maybe I'm wrong, but that's my read, and that's why you're going to see literally a waterfall cliffs of sell-offs once the market begins to realize, oh shit, it's no longer free trade, it's no longer free borders, it's no longer this. You can't do Pax Americana without protecting your friends, because once you become transactional with everybody, they're going to become transactional with you, and everybody becomes North Korea. So that's my view. Anyways, on a more immediate front, hopefully, we're still going to be alive for another year or two, which is about, the length of time I give our planet. We can still have fun and trade. And the way to have fun and trade with Scalper is the following. The basic trend trades, we always take only the greens and the reds when the trend is white, when it's just regular trend. When we go to super trend, as you can see, we're in super trend now in NASDAQ and the S&P. It's such a steep super trend that it may take us half an hour just to even get a sell signal, because we are just selling down super hard, just nothing. Everything is just falling like a water cliff, right? Like there is no retrace. There's no buyers. There's no fucking buyers. If you're just a momentum trader, you could just short at will probably, and this thing could go down another 100 points before it finds even a modicum of floor. So once we get into super trend, the best trades to take are all of them, not just the red triangles, but the white triangles too. In super trend, we take all the sell signals. In regular trend, we only take the red sell signals. Those are trend conditions, right? But then it gets really interesting. When is the best reversal signal? And the reversal signal is when we have the price come back up above the red line, or come up above the white line. In other words, reverse through the signal. And the answer to that really hit me like a lightning bolt the other day. The single best time to trade reversals is when we're coming out of super trend. So once we go from red to white, right? We're coming out of super trend, right? Because when is the greatest possibility for a V-shaped bounce? Off the bottom of the trend. The start of a new trend is from the bottom of the old trend, right? That's the highest probability. So when we don't, obviously we're not even close to finding reversal signals, but maybe around 11 o'clock, 12 o'clock today, we might get a reversal, might get a super trend, people will finally calm down a little bit and start buying the equities. And we go from reds to whites. The break above that level, that's going to be the juiciest reversal trade. That's the reversal trades we want to be making. The ones that are from coming out from the super trend. We don't want to be making reversal trades somewhere in no man's land where there's where it could just as easily go down as it goes up. But if it goes, from the bottom of the super trend, then you have not just reversal trades, but you could also make really big swing trades. You could make that potential. Oh, maybe this is the bottom of the day, and then I'm going to try to trade the V-shaped recovery. So with Scalper, it's all possible. It's an amazingly good tool to give you price action clues on the trend side and the counter trend side. What do I think of trailing stops? Good question. They're useless for. So here's how I would use trailing stops, Zong. If you take Scalper and you say, I really want to use it more on a swing-like basis, I'm going to take let's say, a couple of small contracts on let's say 4 small contracts on a position, right? Maybe I'll have like a 30, 40 point stop. Just for argument's sake, let's say I take this trade let's say I assume this is the bottom, right? And I get long. I'll sell the first one at like 10 points up, the second one at 20 points up, and then I'll trail the rest. I could just trail the rest up and up and up and up. The only way trailing stops are useful is if you're just giving yourself, 50 points of stoppages and you're not looking for quick in and out. If you're scalping, trailing stops are useless. Trailing stops are designed to kind of milk the position if you're looking for a big move, couple 100-point move, that kind of stuff. So you need to know when to use them. Wait, what did Kat say? Kat, you still think I'm high? What do you think I'm Kat? What do you think I'm high? Bob, I'm not making a political talk. I'm talking about how I think politics could have a massive impact on prices, right? So as I said to you, revealed my politics to you up front, and I'm not looking to make a political judgment. I'm simply saying what you have to look at is what are the political decisions being made, what are the economic ramifications of those political decisions, and how is that going to impact equities? That's all I'm talking about. So, everybody has an opinion on politics, and maybe somebody said, we have to see how it plays out. I absolutely do think we have to see how it plays out. I'm just saying everybody overplays their hand, and the hand that's being overplayed, people need to think through what could be the worst consequences of overplaying your hand. I'm just playing those scenarios out in your mind, because instead of you asking me, why do you think stocks are going down? I'm telling you ahead of time why I think they could go down, right? My job is to help you position yourself in the market instead of explaining to you afterwards what everybody else, it's easy. Who gives a shit when you're at the bottom to explain what happened 200 points higher, right? My job is to figure out what happened here before we get to 200 points lower. That's all I was trying to do. Okay, so otherwise, what are your thoughts? Like, first of all, tactically, what do you think about the idea of trading super trend all signals? Does anybody do that? Does anybody find that valuable? Secondly, what do you think about looking for reversals from super trend? That reversals should only be taken from super trend. Any reversals, before that are really not that cool. Oh, I want to tell you one other thing that is interesting, and I wish I could. Let me see if I could find an example of it. I think gold is probably the best. Let me show you. This is very, very okay. So this is kind of really advanced, and it's only pretty much for people who are going to be in my coaching. But I kind of want to show this to you as an idea. So let's go through this. I'm trading gold. So here's gold, right? This is what I want to show you. I trigger a short over here, and instantaneously I'm stopped out, right? So false gold, false sell signal. Now watch what happens next, right? Watch what happens next. I'm going to go up, up, boom. A break again. Hold on a second. Let me see if I can make this again. Okay. So I sell here. I get stopped over here. This is where I get stopped, right? On this red signal. But then on the very next trade, I break the red line. In other words, the line that was kind of resistance or breaks down as support. This is my stop line. And I get stopped out on the first attempt. I go back in on a second attempt short, because what this is telling me is that the price action gave me a sell signal. There was one last burst of buyers, and the buyers could not hold levels, and they broke the level. And once the buyers could not hold the level, oh no, shit! Am I giving you the wrong example? Hold on. This is where I came in. I'm sorry. So I was short here, 59. I got stopped over here. Sorry, I get stopped over here. I get stopped. This takes 3 times. I'm sorry. So I get short over here. I get stopped over here. I get short over here. I get stopped again. And this is where you really, really need to trust your process. So now I'm 2 levels to the stop, and they still can't hold the level. And the third one, I took this one, boom, you break down. I already forgot the sequence of what I was doing. That's a very advanced technique. It's not, not one that I would recommend for people that, don't necessarily have this set up all organized, but it's an interesting one to do because it helps you understand how price action and scalp really work together to really help you. By the way, we touched the moving average and came right back down. Didn't even give us a signal yet because the sellers are so strong that they can't even hold it above the moving average. So A technique sometimes I like to use is if it touches the moving averages, comes down, you could try to sell on the moving average retrace, but that's not part of our, it's kind of a cowboy trade. So I don't want to do it with you guys. Let's see if we can get an actual sell signal coming in. Well, futures trading, I've been a futures trader for like 30 years, but futures trading has really exploded because prop shops have introduced futures trading essentially at a fixed risk proposition, at a very, very small fixed risk proposition. And again, let me put the link to Apex just extended their sale, so it's really great. You can buy like 10 accounts for $400. You couldn't even trade one contract for $400 on a real account. In futures, to have a reasonable chance of even trading, you need $10,000 of capital, right, to trade. That's considered to be a reason, maybe 5,000 if you're super small on micros, to give yourself even a fighting chance, right? Whereas with prop, you need $50 for an account. So it's a completely different game in that sense of being able to trade the exact same markets, the exact same prices, all the infrastructure, but for far less. And then, of course, I always said that the greatest value of prop is that it's the best flight simulator ever. This is how you learn how to fly. This is how you learn how to be trained. How to train yourself well. Anybody saw the horrible crash in Toronto? Fortunately, nobody died. Anybody see that plane get flipped over on its belly? And there's a lot of talk about the fact that the pilots that were flying that did not have the full training that they were supposed to have, which is you just go for us. We lose money. That's the end of it. But when you're flying, you lose lives. But in either case, the best pilots in the world, U.S. Army, U.S. Navy pilots, Israeli Air Force pilots, all of those pilots. You know why they're the best pilots in the world? Because they have massive amount of simulated training, sorry. And that's what futures are. It's your ability to be the best pilot in the world by doing simulated trading, which is really, really important. Is there a red triangle? Is a sell? If a red triangle is a sell, what is the white? It's also a sell, but not as strong. So a white triangle up is a medium buy signal, strong buy signal. White triangle down is a medium sell signal. Red triangle down is a strong sell signal. You can actually eliminate them. I was going to say you could go in here and we could just say show strong trend signals only, and we get rid of all the white triangles. Okay. So what my recommendation is, you actually reminded me of that North Star. My recommendation is when we're in the white zone, I get rid of all the signals except the strong ones. When we're in the super trend zone, I'll take them. I'll take any signal. I'll take a signal that is red or a white because we're in super trend, and I want to take any sell signal in that position. Right? Does that make sense? Oh, damn it! I wasn't watching. All right, we have a actually I think a false sell signal. This is a sell signal. Yeah, this sell signal does not work. But we could take it on a micro level here. Let's see if it's gonna work. Okay, this is a reasonable. The stop is above the spike highs here, right? So actually, this is a case where I came in late. Maybe this works. Maybe it doesn't. Oh, maybe. Come on, baby. Maybe it does work. I'm just gonna take the trade because I just want to bank this. I came in late on the signal. I wasn't sure, but what's good about this, and I actually came in. This is the right size for my stop, which was like right around here. The proper stop, just to let you know, the proper stop for this particular trade is not the red line. It's this line. It's the swing high. in order to be able to really not get clipped by bleed out by 1,000 cuts, lower your size to accommodate to larger stop size. That's the greatest insight that I had. Now we're getting a second sell signal in gold, which is good. So we can, and again, I think I'm gonna, because the stop has to be over here, the swing high. That's a $7 stop, right? So I want to be like just one. I want to be tiny. I got to be just really, really small size here. So even if I'm one, that I can hold it to proper target here. All right, I'm going to sell this. And I'm going to move this over here. So this is my proper stop, and now this is going to be my proper target. And now we're just going to let this trade, breathe and play itself out at small size but proper risk parameters. And again, the reason why I'm doing such ultra small size in this is because, as I said, my first opening trade should not have more than $100 worth of loss, right? Because I'm going to be doing 30 to 40 trades in a day. Let me actually see how many trades I've done so far. Sorry. Let me tell you what I've done so far. 20 trades. I've done 20 trades so far in a day. Okay, 20 trades in a day. Here's my not so beautiful P&L. Do you guys see it? Oh, here it is. 20 trades in a day. So that's sort of like the idea. And I made a lot of stupid errors. Some of them were just bad market errors. But you can see that by keeping my risk at a control, I was able to, you see my P&L got much, much better as the day progressed. And hopefully if I run this through, so, if I'm running this through properly, maybe I'm around $300-400 today, which is fine. I don't have to be at, $1,000 a day every day. The most important part that I realized is that you want to control your risk. If it's going to take me, another, I'm like $3,000 away from getting funded on this account, right? At close to 56 to 59. If it's going to take me 7 days instead of 3 days, so what? Who cares? It's far less important how many days it takes you to fund versus the ability to get funded and stay funded, right? That's the key thing. So that's why I really, I reoriented I stopped asking myself, how much am I going to make on a trade? And I basically only ask myself, what am I going to lose on a trade? And then worry about, do I make if the P&L if the trade P&L is great. If it doesn't P&L, then I know my loss is controlled and I can focus on the next trade. And that's it. It's really interesting when you change your perspective from wins to losses. You literally don't give a shit about wins. Like I didn't even know that I was up for the day. This is the first time I looked at my P&L. So that's the way you should have. That's kind of the right attitude to have in terms of doing success. Because look at this. You could have look at the moves in this super trend down and now V-shaped up, right? If you were like sort of, oh, I'm going to get short here, you're going to have your ass handed to you. We have no signals. We just did a vertical V shape because the market is, refusing to die. Excuse me. So, look at this. This is the highest results of the poll I've ever seen that we've done here today, guys. 96% in agreement. Wow. Thank you so much. I really appreciate it. 96% agreement that I am right today, that all of my riffing about philosophy at, control on losses and controlling size. Really, in agreement with what you guys are thinking. So hope you guys like that. Hope you guys really like that. So tactically, the important things I want to leave you with is trade the red-green triangles only in the white trend. Trade anything that comes your way, meaning any kind of down signals, red or white, in the super trend. Trade reversals only off of super trend. Let me actually give you an example of this. Let's go to gold. Okay, whereas gold was in massive super. Okay, here's a good example. Here's a good example, right? So here's what I mean about. Oh God, I'm so sorry. My nose is just itching like crazy. I know I look like I am the biggest coke fiend in the world. The irony of the whole thing is I don't drink, I don't smoke, I've never done a drug in my life. And I know that me itching my nose is like, it looks like I'm just doing lines of blow every minute of the day. It's just allergies. So forgive me, guys. Anyways, let's go over here because I want to show you the reversal trade that I love. So we're in super trend, right? We're in super trend. I'm going to go step by step, right? What we're looking for is the price needs to come out of super trend, right? Now we're coming out of super trend. And actually, what we want to do is we want to extend the line to maybe like 30 bars here. Just to, no, I have to go back to replay. Oh, no, okay, no. Okay, so I extended it to 30 bars. So this is the last sort of, that was the last buy signal, right? We're out of super trend. I'm looking for it to break it to the downside over here. It actually broke it over here. But let's say, I missed it just for argument's sake, right? And I'm looking for this, for the price to trade it. Now I get a second green signal. We're out of super trend, and I'm looking for it to break this to the downside as a reversal signal. Okay, boom. I broke this to the downside. This is my reversal trade. The high would be over here. The stop would be above the 74s. I'm short here at 70. Target would be around 68, somewhere around there. Somewhere on the drop side, and it drops like a stone. Now, if you're a swing trader, if you're somebody who's like looking to take big reversals, this is the perfect place to do like trail stop or multiple exits or anything else that you want to do that makes imminent sense for you. But that is the reversal trade. That's the money trade in our situation. Okay. All right, we're still, you see how long you have to hold these trades now. These trades are gonna, and the whole point is, you would have been stopped out 1,000 times already. You'd have lost 20 and 20 and 20 or whatever you were using, and for no reason, because it's not like the thing is completely reversing. You just get stopped out on too small a stop. Too small a stop is just as bad as no stop at all. That is literally what I began to realize. Does that make sense to you guys? Somebody give me a yes in the room. So we're starting to turn a little bit in NAS, in the S&P, a little bit. So just to let you know, you're handicapping this kind of, this particular price action. Imagine this like gives us a sell. It breaks through the moving average, gives us a sell signal. Somewhere maybe around the 45s, right? What's your stop? Your stop is all the way at 105s. It's a 60-point stop. There's no effing way that you should be trading this with more than one micro contract. Because if you're trading it with a large contract, it's a $600 trade against you. If it goes up, and it easily can, you have no fucking guarantee that that this isn't going to just be done, and everybody decides, oh, the next wave is going to be up. All we're trying to do is handicap price action on the most immediate front with a probabilistic assessment, right? Just with a probability assessment. So still no signals. we're holding the moving averages here a little bit. Big white shape. By the way, North Star, you were asking me what's going to happen now. Like right now, actually, I made a mistake. Now that I'm in reds, when I go into reds, oh God, I just realized, you know what I should do? Oh, God damn it. Am I going to have to redo my code again? What I really, really want, what I really want the rule to say is show only strong trend signals when not in super trend. So I'm probably gonna have to redo this. So I'm gonna unhook this now because I want to see the whites as well. I need to modify this condition because the real rule that I wanted was that one. When you ask me why I do so many rewrites of the thing is because all these tiny little nuances of price action, as I learn them, as I study them, as I see how it works on a day-to-day basis over and over and over again, you know, I'm able to come up with good conditionality. So I'll rewrite the conditionality and, you know, I'll put it out there next weekend, over the weekend. So trading gold can jump with huge bars in a heartbeat either way. Yeah, absolutely. They can sweep at like $3, right? They can sweep 30 levels, right? Sweetwater, we've all seen it. Gold is nowhere near as liquid as gold has all the attractiveness of the S&P with the volatility of NASDAQ, right? Right now, I love gold. I think gold is just a long-term buy. Absolutely. Whatever's happening right now in gold as a sell-off is, that's just my opinion on the macro side. I could be 100% wrong. Everything works out. Pa Americana rules, and there is no inflation, and the world bends to our will. Gold goes to zero. Now, I mean, gold becomes a non. Gold right now is acting because this is the freak out trade. This is the nuclear button. This is the finger on the nuclear button trade. That's why it's going up. And whatever sell-offs we have here, I feel the sell-offs in gold are pure profit taking. They're just pure little, relief, profit taking relief on, a move towards the 3,000, and then it's, I think if it takes out 3,000, the move to 4,000 could be in weeks, and then everybody and their mother is going to see it. Wall Street Journal and economists and everybody else is going to start printing stories about is gold to buy, and then the public is going to rush at 5,000, and then probably it will probably eventually crash. But gold is really, trading on gold has always been a freak out trade, and it's starting to be a freak out trade right now. Nothing on NASDAQ still. We tested the lows. I'm gonna have to go, guys, because I got a meeting coming up. So we actually, every single trade we did today, we made money on. So and we're floating this gold trade for maybe another 10-15 minutes at very small size to give it a chance to materialize. By the way, watch this. So here's a cool thing. So remember I said if you're going to be over here, you had a much larger risk. Now, if you're over here, it's a smaller risk. The risk went from like 40 points or 50 points to like now about 30 points, maybe 80 to 30, right? So that's in assuming we drop down and we get a signal. So that's how you manage your size. So now I go from maybe one contract to two contracts because I'm willing to take two contracts risk on that sort of a stop. So the most important thing out of scalper is make an intelligent stop, right? So that if it's triggered, it's for a good reason, not just because of noise. And secondly, size your trade according to the size of your stop, and don't make any opening gambit trade larger than $100 risk on your account. I think if you keep those three things in mind, you will survive to fight another day, which is what this is all about. This game goes to the survivors. So I leave you with those thoughts of wisdom, guys. Anything else that you want to pump out at me, let me know. Nope. I will see everybody Monday back in the swing. I'll hopefully be 100% at that point, and looking forward to everything with you guys. Thank you so much. Thanks for hanging out with us today. Hope you guys had fun. And as always, you want to join me? Let me put the link in here. And if you want to get Apex, they just extended the sales. Be sure you get some Apexes so you guys have a chance to trade some props. Thank you again, guys. Everybody have a great day. I'll see you guys later. Bye-bye.